Imagine a perfect world where you can build a restaurant, open the doors, and make loads of money. Unfortunately, those days are over. It takes great leadership, hard work, and long hours to operate a successful restaurant. Together, we can make it happen. This is Restauranttopia.
Welcome back to Restauranttopia. We have a special guest from WeSellRestaurants.com, Robin Gagnon, here to talk about everything that you need to know to prepare your restaurant for sale and get a good exit strategy. Robin, thank you so much for being on today. How are you doing?
I'm doing great, Brian. Thanks so much for the opportunity to talk to the folks that are listening about such an important topic, exit strategies.
No, I think you see a lot more than most people do as far as how many, restaurants that you deal with that are selling. You're from WeSellRestaurants.com, so you're seeing restaurants sell every day. So tell us a little bit more about that.
Sure. So We Sell Restaurants is the largest restaurant brokerage firm in the nation. We work in about 45 different states. And the reason the role that we play is so critical, Brian, is because we see independent operators actually get to the end of the life cycle of their business and have no way to create this capital event that would help them for the future, right? To help to fund their retirement. And we're also seeing some societal changes because many of the folks who are looking to sell or exit the business are baby boomers. So they have children that are maybe millennials, maybe Gen Z or Gen X, who don't want to go into the family business. So something that they see as their legacy is now out there. And you know as well as I do, Brian, this business is emotional, right? We talked about that in our book, Appetite for Acquisition, that we wrote 20 years ago. Restaurants are the fabric of society. They are where you go when there's an engagement, when there is a celebration of a birthday, when there is a retirement. All those things happen. So the restaurant isn't like having a dry cleaners, right? They're woven into the fabric of the community. And so that event, it's not only needs to be a financial event that pays off for the restaurant operator for all those years, it's also an emotional event. And we have to make sure that the person who comes in continues that legacy, because odds are it's not going to be that child who's moved on to a different career and is no longer following his family in the path of the restaurant business.
Yeah, I think the emotional aspect of it is, again, because the value it may or may not be there, and what the perceived value of, it's like, what's my arm worth? It's well, so, it's like a child. So to get the value out of it, the restaurateur is probably not going to see the number that he wants or thinks that it is, but the market is, has a value for these businesses. But you're really looking at, who are you selling it to? Is this person the right fit? Are they just going to rebrand it, or are they going to continue your legacy? And how are they going to do it? Are you setting them up for success? If they continue your legacy, is it going to close in 24 months? So there's a lot of moving parts here, and I'd love to hear more about your thoughts on it.
Yes, absolutely. And sometimes, Brian, people will actually think that because the business is not making money on the books, right, the tax return, we're sort of at odds with the U.S. government here and your accountant, right? That your accountant's doing everything that he can do to minimize the tax consequences every single year and minimize the profits. On the other hand, as a restaurant broker, I'm looking at the business and I'm recasting all of the value that you receive for the business. And there are certain tax strategies that are absolutely legal. For example, a restaurant owner may run all of his automobile expense through the business because it's primarily what he uses the automobile for. May pay lease payments for him, may pay his cell phone, may pay his health insurance and his life insurance, and also pay him a salary. So when we evaluate that business for sale, and you look at the bottom of your tax return and say, aha, I didn't make much money last year, I don't have to pay the government much. Then you say, well, maybe my business is not worth much. We go through a process that's called recasting. And that's a very important thing. We measure every single thing that owner benefits from. And we're allowed under SBA lending criteria to add that back and recreate really what the inherent value is to a new operator, and then apply multiple to that. So we have some restaurant owners absolutely who think, gosh, my business is worth $500,000 because I do $500,000 in sales. That will never happen. On the other hand, we have restaurant operators who think, well, I didn't make much money or pay any taxes last year, so my business isn't worth anything. But it actually is, because he's got depreciation and interest and owner salary and owner expenses all layered into that, which are decreasing the profit on the books, but will be added back for the view of the next buyer. Because ultimately, the new buyer, he is going to walk in, and if he does none of the things that the old buyer does, the old operator does, he's going to generate that kind of income for his family. And he can either choose to have those same expenses or pay it out in salary or leave it as profit in the business.
Yeah. And the debt, and you still got to service the debt. So that we always say, like, when you're a seller, you want to make sure that you set up that buyer for success and make it financially feasible, outside some circumstance where the business drops significantly, where that person's going to continue your legacy and have a good operation.
And that's actually a very good point, because generally speaking, when you're designing, we talk about an exit strategy because it really is a strategy. It's a multi-year approach. You may bring your business to me today and I can look at it and say, these are the things. Look, you got a couple people, you may be paying them off the books. You may not be running your catering through the business. I mean, we all know those sorts of things happen, but we need to tighten this up and tidy it up before we're ready to present it. So you may need to operate a year with a good clean set of books and records to maximize your payout. So it may be a place where we have to coach you for a couple of years to get you, and sometimes it's coaching to say, you got to raise the sales. You're in a bad lease. We've either got to lower the occupancy rate or we've got to raise the sales to bring you in line. So there's a lot of coaching and counseling that goes in to that exit strategy.
No, I think I was so excited to have you on today, Robin, because it's not, I'm going to put my business up for sale on Monday, and by Friday, I'm at an island somewhere drinking a Mai Tai. This can be a multiple year process. And no matter where you're at in the life cycle of your restaurant or how close you are to retirement, you still want to prepare for this. You want to think about, what am I going to do if that day does come when I want to sell? How do I position this company? And, 1 year is good, but more confidence that you're going to give that buyer is if you have multiple good years, and that this thing is an ongoing concern, runs with less of your input. So you're not, cutting the head off the snake, so to speak, where if I leave the business, it's going to fail because I'm such a critical part. So if you can remove yourself, make sure it's an ongoing concern, that it operates with or without you, and that the expense structure is appropriate and really be replicated into the future.
Absolutely. And you raise an excellent point. But on the financial side, it may need multiple years. The SBA for lending typically looks at 2 years. The seller may also want to consider being the bank himself and doing some form of owner financing. But it's not just the financial piece that has to be understood. What is your operational structure? Do you have a plug and play situation? Are your recipes documented? Because so many people on the franchise side of things, they have process systems and documentation. On the independent side of things, it's like, oh, add a pinch of this and that. And so you also need time to document those processes. And I do have operators say to me, well, I want to sell the business, but I don't want to sell my recipes. Well, that is the business. That's what the client is coming for. So you also have to do some coaching around, hey, we've got to make sure that those recipes are documented. They can be your portion sizes, understanding your food costs, all the basics that you talk about so frequently in these podcasts and on your website, that you've really got to have an understanding of your business from top to bottom for someone else to be able to come in and step in your shoes. And, I did a LinkedIn post about a month or so ago. One of the most crazy amount of engagement I had ever gotten on a post, because it was about a gentleman who actually didn't plan for this event, didn't have a family member to take over, operated about 90 different units. And within
Wow.
a young person, not relatively young, I mean, I'm talking about 45, 50 years old.
Oh, prime of his life.
Absolutely. And died unexpectedly. There was no key man insurance. There was no means to transfer the business. I mean, immediately, like 25 doors shuttered. It was devastating. And what you don't want to do is put your life's work into something and then not have any form of a plan. I mean, that's not fair to your heirs and your family. Like, who literally, what is your contingency plan? What is your crisis and
Yeah.
chaos plan if tomorrow you can't operate the business? And fortunately or unfortunately, we all lived through this horrible pandemic of 3 years ago. But
Mhm.
that should get operators thinking about what is the worst case scenario. I wake up and I can't operate one day. What's my cash in the bank? Do I have insurance that covers me in this event? Do I have key man insurance so that somebody else can operate? What are the conditions under my lease? Is there some contingent liability for someone else, or is my estate going to be hit paying, $100,000 of rent for the next 5 years because I'm personally guaranteed? So exit means looking at the unexpected as well as that planned exit from the business.
Yeah, the 3Ds, death, divorce, and disability. And we coach operators all the time on Restauranttopia with this. We call it the hit by the bus planning. Do you have your house in order from operation manuals to leases to legal documents to, and you're not going to just sit down on a Tuesday and knock it out by Thursday afternoon. You want to pick, it's a due diligence list in the show notes, because that's the things that you're going to want to have in place, ready to go when you want to sell your business. And what does that look like? It looks like your operating agreements, your leases, any employee contracts, any contracts with any vendors, recipes, prep sheets, jobber sheets, all the things that you have in your restaurant that may or may not be documented, you need to make sure that you have, and in a place where they can be easily accessed and transferred to someone else if in the event of a sale.
Absolutely. And I would add to that a list of equipment, maintenance
Mm-hmm.
records,
Yep.
right? Employee records. And it may take a team, Brian, to create that, because you're right. You're not going to sit down
Yeah.
on a Tuesday afternoon. You may need help from your CPA. You may need help from an attorney. You may just need help to like sit down and have those conversations. And those are tough conversations to have. It's like all of us, we all put off doing our will because we don't want to believe that the end could come. So
Mm-hmm.
it's hard to get restaurant operators to sit down and think through those things very thoughtfully to get to a long-term plan.
No, I love this. This is such great information. I really appreciate you being on. We're going to have all your information in the show notes. And I think this is something, whether you want to sell today or not, is really irrelevant. This is good housekeeping that you should have in place, because you never know when the need will arise. The old saying, if you want to hear God laugh, tell him your plan. If you don't have your house in order, people get cancer, people get in car accidents, people get divorces. These things happen. We pray that they don't happen to you, but at the end of the day, they could happen. And if they don't, and you go to do a liquidity event and you want to sell, you have your house in order. It makes it easy for the broker. It makes it easy for the attorneys. And it also makes it easy for you as the seller to transition your organization to the buyer and get full value. And I think that's what we're really talking about today, Robin, is how do you get full value for your restaurant? The market is going to place amount on your restaurant as a value. If you don't have your house in order, it's going to be discounted significantly.
Absolutely. Yeah, I couldn't have said it better, Brian. You're absolutely right. And we will sit down with anyone who wants to just have a discussion and do
Mm-hmm.
a free valuation of their business and say, listen, this is what it's worth today. And we will go through some probing scenarios and ask, do you have these sorts of things in order? Provide them with some checklists and some tools and techniques
Mm-hmm.
to get ready to make sure. Because and I'm surprised by how many times sellers have made assumptions about family members who may step in. And then they ask them, and they're like, and I will tell you, we actually sell a number of businesses for individuals who come to us and say, yeah, my son wanted to do this. I made the investment. A year later, he met a girl in fill in the blank and
Yep.
he wants out. And so, that those family intricacies all get rolled into this as well. So you also have to have a plan. Last thing you want is for your family to be trying to mourn you and also deal with an encumbrance around their neck. It should just be easy and simple for someone else to step in and buy the business.
I love it. No, Robin, thank you so much for being on today. Great tips. We'll have all your contact information in the show notes. And thanks so much for being on. Have a great day.
Thanks, Brian.
It's a high quality pod. Thank you, everybody.
Take care. Adios.
Thank you for listening to Restauranttopia. The gratitude that we have for each and every one of you spending your precious time to listen to this podcast is immeasurable. Please make sure to tell a friend about this podcast. And also, if you have any feedback for us, visit us on restauranttopia.com and drop us a line. You can also subscribe on your favorite place to listen to podcasts. Thank you and have a great day.